In this video, we discuss why your mortgage payment is about to go crazy. All that and way more. Stay tuned for that, and also be sure you uplift at least one person today. And we are starting right now. Hey YouTube family, happy Wednesday. The scars of sky-high home prices that were up over 32% has been healed, to a certain degree, by the historic low mortgage rates during the past 2 years. Even as home prices begin to skyrocket, the mortgage payments of many buyers remain very reasonable. Those days, however, are disappearing. Mortgage rates have now returned to pre-pandemic levels, and new and current home buyers are feeling the full brunt of these spiking prices. Back in December, 30-year mortgage rates were right at 3% flat. A buyer at that time who took out a $500,000 mortgage would have assumed a principal and interest payment of about $2,100. Now that the average mortgage rate is closer to 5%, that same size loan would equal $2,600 monthly payment. Over 30 years, that's an additional $166,000 of interest. Yikes! And if you're curious about what is happening in the current real estate market, you can check out that video by clicking up here on the card, and leave a comment below if you like the content, or maybe let me know what you want to see in the next video. Mortgage rates have not been this high since 2007 and are putting home buyers in that same uncomfortable position. To give you an idea of the severity of the market, the typical American household would need to spend about 30% of their monthly income just to make their mortgage payment. Based on the average priced home across the United States, affordability, or the lack thereof, is beginning to show flashes of the nightmare that was the mid-2000s housing market. Now, this doesn't mean that a 2008 housing crash will occur again, but it does mean that affordability is dwindling. During the last real estate boom, home builders were pumping out new developments at a fast break level. Once the market began to slow down in and around 2006, the real estate market became overly saturated with supply, and this was a major contributor to cause real estate housing prices to plummet. Home builders can't even keep up with the current demand, and if we slide into a slump, it's highly unlikely that inventory would flip from a drastic undersupply into a housing glut, like we experienced in 2009, because most of the mortgage housing market is fixed rate. Raising the rates won't raise the monthly payments on current homeowners, but this will impact first-time home buyers considerably. Hey everyone, my name is Vasilios and welcome to the channel. If this is your first time here and you want to get the latest actionable tips from a local realtor that actually save you time, save you money, and result in a smooth real estate deal, start now by subscribing and clicking that bell notification so you don't miss anything. And if you like the video, then, well, like the video. Now, back to it. There are many real estate market economists praying for surging mortgage rates to slow down the locomotive that is the current housing market. The speculation is the rate of home appreciation that we are currently having is severely unstable, and if it continues on its current path, we may run the risk of the housing market becoming overheated. Continuing at this clip could result in a bursting market bubble. However, it is preferred that we slow down the market to an appropriate level of growth and appreciation rather than having the bubble pop. Many daytime news analysts are finding signs of a stewing housing market bubble, and to a certain degree, they're not completely wrong. Using what we know from past charts, analysis, and history, the thought that soaring and rising mortgage rates would cool down the market does make sense. After all, it would send a jolt to the demand side of the real estate market. A sharp increase in rates will knock new buyers out of the market. It'll also mean certain buyers may even lose their current loan eligibility. The hope is that home price appreciation will decelerate, but it is believed that appreciation will be held up by the current tight supply. Raising rates will, however, continue to also keep housing supply at bay. Homeowners that are rate locked won't be apt to list their current property due to low locked rates. Only time will tell. Hey listen, if there's anything in the world that you want to talk about or have a question, reach out anytime. Let me treat you to coffee. No obligation, really. 508-821-8835. It could be about the weather, cars, real estate, racing, whatever. Now that you are prepared and ready for whatever mortgage rate may come, you will want to follow this video with this next one right up here that talks about the 5 top tips for buyers in this seller's market. Also, if you think this video can help out a friend or family member, please consider sharing. As always, thank you for watching. I'll see you in the next one.